The reason why Ray Dalio is betting against the US and Europe. China, a nation that contains half of humanity on the Asian continent, powerful for its perseverance and action. The work culture of an entire country led it to become the #1 country on the heels of the American economy. Today, it is positioned at the top. Besides being the country of origin of a virus that leads the world to a pandemic, a milestone that changed our customs and way of seeing life will continue to change. Today, we do not know if because of its own cause or because of the fall of the United States, the communist country wins the battle. With Ray Dalio betting against Europe and the US, the Asian juggernaut is gaining ground in the global economy. Is it true? Keep your mobile phone on. We'll continue with this topic. US and Europe are making Ray Dalio pessimistic. The founder of Bridgewater Associates placed a big bet against US debt, has long warned that the US and European economies are in decline and that China will soon position itself as a global superpower. Last week, banking numbers dawned in the red. The S&P 500 and NASDAQ indexes fell, as did the European markets. IBEX 35, DAX falls, causing major market swings. The Bridgewater Fund is shorting US and European corporate debt after shorting US government debt. What does it mean? Dalio and his partners in the fund, where they manage $150 billion, make short investments, i.e., they're betting against it, waiting for it to get worse to generate profits by buying bonds on the downside. Moreover, Ray Dalio's fund is betting against the stock market. We are in a radically different world. Big business, which has to provide for its investors in times of uncertainty, is going all in. Bridgewater Co-Chief Investment Officer Greg Jensen says the bet against corporate bonds is based on the firm's view that inflation will be much more stubborn than the Fed currently anticipates, ultimately forcing the central bank to accelerate the pace of interest rate hikes. Federal Reserve officials have announced that they will raise central bank interest rates by 0.75 of a percentage point, the largest increase since 1994, and signaled that they will continue to make aggressive increases this year. They were widely criticized for failing to anticipate rising prices and for being slow to address the problem. Rates will continue to rise until the end of the year in an attempt to reduce inflation. The outlook is not guarded, and neither are the investment strategies. Jensen says that growth in the US economy will not be as it was 5 years ago, but that the nominal rate should remain stable, leaving it in a weak but somehow sustained state. We think nominal growth will continue. The real economy will be weak, but not a self-reinforcing weakness, says Jensen. In a paper called The Price of War, named after Russia's invasion of Ukraine, the OECD released its global growth predictions for 2022. The title denotes the negative impact the war has on the world. The growth rate in December was 4% and has now adjusted to 3% according to World Bank calculations. In turn, China's GDP is expected to grow by 4.4% this year and 4.9% next year. China's economy as a superpower. The People's Republic of China, better known as China, has had very strong growth over the past decades, with the fastest growing GDP in the world, and despite the impact of the pandemic-induced crisis of 2019, is recovering well without losing its second place as the world's top producer and exporter. Now, with the crisis facing the United States, it has a chance to move into first place. Is this possible? China is currently at a juncture of change, with some experts claiming that the COVID crisis, suspicions of an alliance with Russia, a pessimistic forecast of a real estate bubble, and offensive policies against the private sector are driving away foreign investors who are part of China's economic miracle. The Chinese economy has been an economic miracle and grew as the giant increases its GDP ratio. Markets are worried about China's ties with Russia, that's spooking investors, and risk aversion has been around since the start of the invasion. Stephen Ennis, managing partner at investment service SPI Asset Management, said in a statement in a recent interview with Bloomberg. However, these are reasons that will change over time. The COVID restrictions will soon be removed, with them foreign investors. Although, according to the Institute of Internal Finance report, China is not dependent on these capitals to meet its external obligations. However, the institution believes that the wave of divestments has its limits, and there are many companies that have been in the Chinese market for many years, and exiting the country will not be an easy or quick decision. In a recent editorial in The Economist, he points out that the upcoming National Congress of the Communist Party of China, or CCP, scheduled for October, says, "The optimistic view is that this dark period of ideology, policy mistakes, and slow growth is part of the build-up to the Party Congress. When it passes, pragmatics will have more control of policy, COVID-0 will end, and support for the economy and technology will return." Even so, its alliances with Russia, the oppressor country, according to some analysts, places it in the Eastern economic sector, a sector that delimits trade and industry. China, by supplying Russia, positions itself in this sector, receiving isolation and segregation from Europe and the United States, with sanctions and the flight of its investors. The regionalization of the world trade divides trade between Europe and the US on the one hand, and trade between China and Russia on the other, into two main sectors: capitalism versus communism. Choosing sides can be a disadvantage. Did you make it this far? Leave your comment in the video. Don't forget to subscribe if you haven't already done so to receive more information on this topic and others related to business and entrepreneurship. Did you do it? Alright, let's continue. US economy. The US economy has been in decline for some time, but its resilience should not be underestimated. Not for nothing is it the most powerful in the world. Although these are difficult times, it does not imply the country's downfall. If, according to Elon Musk, the recession was necessary, it may be that a cyclical movement will lead to the health of the economy as a whole, rather than raining money on fools for too long. Even if big investors like Michael Burry take their money out of the stock market and bet against corporate debt and bonds, it's just a business. It is natural to protect your money from the powerful who manage millions of dollars in investment funds. It is natural to protect their money. Of course, that doesn't help. But yes, markets are down, inflation is high, and US stagnation will paralyze the world for a few quarters. At least that's what big businessmen like Ray Dalio reckon. The global inflation caused by Russia's intervention in Ukraine is real and affects consumers' pockets on a daily basis. However, the stakes are high. Ukraine provides a large percentage of the world's wheat exports. Daily bread becomes more expensive because of this fact. Plus, the oil and gas that are at stake when this territory is invaded. The war will eventually end, and the winning side will make a lot of profit, more than it would have made without the war. It could still get worse, it could get bigger and more destructive, but the estimates are in, and the stakes are on the table. Conclusion. Ray Dalio and his businesses are betting against the US and Europe. Pre-selling bonds on the downside is the strategy chosen by the investor and his partners at Bridgewater Associates to mitigate gains and losses from the sustained rise in inflation. The Federal Reserve expects inflation to rise, but Ray expects even more, which means more profits for the investment mogul. The Bridgewater Fund's various strategies will see it capitalize on the stagnation of the US economy since the outbreak of the war in Ukraine, as well as the tough return to normalcy after the COVID-19 pandemic. Against this backdrop, China would become a global powerhouse despite its COVID-19 slumps and restrictions. With these bets, Bridgewater not only benefits, but also alerts society to the scenario and to mistrust it sows in consumers, who are already dissatisfied with the US authorities' handling of the crisis. The strategy is there for the taking, and the big investors will not miss the obvious opportunity to take advantage of it. And this is as far as we go with today's topic. Thank you very much for watching our video. Don't forget to like it if you like it, and leave your comment. Subscribe to the channel to receive more information and keep you up to date with all our varied content. We'll see you next time.